All right, so I'll be sharing my screen shortly and let's take it from there. So what I'll be teaching you guys today will be on decentralized finance. Reason is being that as the crypto space is evolving and currencies are moving gradually from fiat money to digital money. And that's why you see countries now moving into central bank digital currencies, that's CBDCs. All right. Now, what I want to tap into actually is this cryptocurrency space, but in a centralized manner, because cryptocurrency on its own is decentralized. And that gives the power of currencies and authority to the masses or to the citizens. Whereas centralized systems give power to governments, the retain authority, they can control you. A government can decide that they want to withdraw cash from the system. So what they do is they now limit how much the bank can give to you at a point in time. They also want, if they want to maybe reduce cash flow, they can decide to increase interest rates and other things government do in terms of monetary policy to control finances and control the citizens. But with decentralized finance, your money is with you. No government has the right over it. You decide which one lives and which one will not go. In centralized finance, the government can decide to put a blanket tax and say, for example, for each 1,000 naira you transfer to any account, you pay a fee of 50 naira. Now you can't do anything about it. They don't come out from your bank. But if it's decentralized finance, only you has access to your phone. Only you can determine how much lives, when it lives, how it lives, and everything. All right. So what's DeFi all about? Aside from sending money to one another, there are a variety of services we use today. For example, loans, saving plans, insurance, and stock markets are all services that are built around money and together create our financial system as we know it today. Now, today, our financial system and all its services are completely centralized, which means they are controlled by governments. And those governments are run by our leaders. And so, whatever policies they bring forward is in tandem with the level of knowledge they have in terms of economy. So if you have a leader who is not good with managing the economy, it transcends to his monetary and fiscal policies, and as well, the citizens begin to suffer. When you have a leader that knows about economy, his knowledge also transcends to fiscal monetary policy, and so the citizens also are happy. So banks, stock markets, insurance companies, and other financial institutions all have someone in charge, whether it be a company or a person that controls and offers these services, like I explained earlier on. So with centralized systems, you are subject to the knowledge of whoever is the one controlling the system or offering those services. Now, this centralized financial system, or CeFi for short, has its risks management strategies, fraud, and corruption, to name a few, that has bedeviled that centralized system. Now, but what if we could decentralize the financial system as a whole in the same way Bitcoin decentralized money? Now, how did Bitcoin decentralize money? Bitcoin made it such that monetary transactions are seen on an open ledger. So you can't hide anything. A government can tell you, for example, that it approved a project worth 2 billion. After a while, it comes back and says, okay, that the project was revalued, and then they spent 10 billion on the project. Now, who would you ask? How can you verify? Meanwhile, at the same time, contractors that did that project are complaining that they were not paid, they're still being owed. So you're wondering, a project of 2 billion, at the end, they spent 10 billion in executing it, and yet the contractors are being owed. So who has the money? You go to central bank, they don't have the money. The contractor was not paid, so doesn't have the money. The person who approved, the president, will tell you it does not handle money. At the end, but money left. You see these things that governments do. With decentralized finance, you can't do that. Why? Because I don't need, government account is hidden, various accounts are hidden by the bank, so you can't verify anything unless they bring out this information to you. Which is why they brought out that act of Freedom of Public Information Act, right? But in this country, it doesn't work. But on the blockchain, for example, decentralized, I don't need to ask anybody. I simply just pick the wallet, the transaction hash ID, and I see everything from which money, how much left, where it went to, where it was at each point in time. If the money entered even to the contractor's account, I can trace it down to even what he did with the money. If he dashed it to family, friends, you can trace it all the way down. Now, that level of transparency is what governments don't want. But we, the masses, want it because that's how we're able to know if they're leading us right or not. Okay? So all this fraud, all this corruption can be brought down to as minimum as possible once all these transactions are brought onto the blockchain. Now, DeFi is a term given to financial services that have no central authority or someone in charge. With DeFi, what controls these DeFi projects are simply smart contracts. And these smart contracts, ab initio, the way you want to build a house, you first of all go to an architect and he draws the floor plan, draws the house, and then the builders come and just transfer what's on that paper onto the floor, right? So it is. For smart contracts to be written, a blueprint will be generated of what the project is meant to achieve. And based on that, those instructions are inputted into the programming of the smart contract. And then for a smart contract, is an all or none event. That means if you meet this criteria, it gives you this outcome. If you don't meet that criteria, it doesn't give you the outcome. You can't bribe it, you can't cheat it, you can't go about it. It's as simple as that. So using decentralized money, like certain cryptocurrencies that can also be programmed for automated activities, we can now build exchanges, lending services, insurance companies, and other organizations that don't have any owner and aren't controlled by anyone. For example, Binance is a very big centralized exchange. It's not controlled by anybody. When you go to do your spot trading, your derivatives trading, your futures trading, it's simple. They are smart contracts. Once you have the particular coin, you choose the trading pair, it simply matches everybody automatically and trades are going on. Imagine if Binance, as of now, is doing between 40 to $65 billion worth of trade every day. That means every day. All the banks in Nigeria put together, I'm not sure that transactions, they can boast of that envelope of transaction daily. Now, one exchange. So imagine if it was somebody controlling it. Will it be possible? That's the beauty of decentralization, the blockchain, and the crypto brings into the space. Okay? So lending services, like we have Avi, we have Compound. These are various lending services. You simply go there, borrow money. Once you meet the criteria, they give what to call over-collateralized loans. So you come with your crypto as collateral, drop it there, pick the money, borrow, go and do what you want to do. And once you pay back at the right time, they release back your capital to you. That means your collateral. You don't meet the payments and you go past liquidation threshold, it simply liquidates your collateral and makes the transaction good. So it's not a question of you chasing somebody around. Like in the regular financial system now, you can borrow money, put a collateral. If you can't pay back, banks start chasing you around to pay. You know, keep jumping up and down, switching off your phone and all that. On the cryptocurrency space, decentralized finance, nobody chases you anywhere. They're about to simply send you an email to inform you that you're about to cross your threshold based on your loan to value ratio. So if it's 75%, once your threshold hits 75%, it simply sells your assets straight away and pays back who you borrowed the money from automatically. Then insurance companies, you have crypto insurance companies as well that you insure particular products or transactions with. And if the condition is met, you get reimbursed. Okay. Now let's take a look at some of the building blocks that comprise it. The first thing any financial system needs is, of course, money. You may be thinking, why don't we use Bitcoin or Ether, which is Ethereum's currency? Now, these cryptocurrencies, Bitcoin, Ether, and the rest of them are volatile. So they go up, they go down based on laws of demand and supply, market sentiments, and the fundamentals of the project. So they will not be suitable for this kind of project. So, well, as for Bitcoin, why it is decentralized, it has only very basic programmable functionality and is not compatible with the Ethereum platform because Bitcoin was designed as a store of value or money. It was not designed to handle smart contracts. Though recently, a group of guys came together and started working on the Bitcoin blockchain and then imprinted the first Bitcoin NFT on the BRC20 network called Ordinals. So gradually, they've been able to create a layer over the Bitcoin blockchain that is able to recognize imprinting of NFTs. And of course, from that, programmability is coming into Bitcoin. That's what it means. Because throughout from February, that project started around February, they launched it and then kept testing it. It became very popular in May. In fact, there was a whole wave of minting of NFTs on the BRC20 network in May this year. Okay, and at that period, Bitcoin had the highest transaction fees. In fact, Bitcoin broke record. In some days, transaction fees went as high as $99. Never in the history of Bitcoin has it had that kind of high transaction fees. We're seeing that with Ethereum, not with Bitcoin. So that's to show you that the crypto space is constantly evolving. In fact, there are some aspect of crypto I don't put into my video course, in my training course, simply because I know that in less than 6 months it will be out of place. I mean, it will be outdated, and that will now mean me going to keep redoing my videos over and over again. So what I do is the ones I know are the basic infrastructure, I know are the base layer that will stay like that for long. Those are what I put into my trainings. Then I created the WhatsApp support group so that as more information is coming out, as updates are happening, those are the ones I now teach you practically in class. Okay. For example, trading strategies. No trading strategy is cast in stone. You can use a particular trading strategy today. This month is working for you. You are doing well. Use that same strategy next month. Suddenly you are recording losses left, right, center. So strategies are things you have to keep adjusting as you look at the market, understand the market, and see how things are going. So notice that most crypto trading programs don't put trading strategies or risk management strategies in the course. You have to now interact with the mentor. He will now teach you his own style, how he does his own trades, and you now learn the psychology behind it, and then you are able to now do very well what you're doing. Add it to your own knowledge and continue for where you stopped. Okay. So that's how crypto is. Now, Ether, on the other hand, is compatible and programmable. However, it is also highly volatile. So it's a challenge too as well. Because if you entered when Ether, let us say you entered a DeFi program when Ether is at $1,000, say $500. Now Ethereum is at $1,800 and above, you are in profit. But what if Ether went from 1.5 to 900? What happens to you? And most likely the DeFi project you invested in is that of maybe 18% per annum or 24% per annum yield. Whereas your principal asset has gone down from 1,005 to 900. So you see, whatever profit you think you would have made from the DeFi protocol, you've lost in the devaluation of Ethereum. Now, of course, you will not want to sell your Ether at that time because the price has tanked. You have to wait for it to go appreciate above your entry point before you can sell, right? So it means you have to now be patient, and then it's a race against time. So what if you have an emergency and you need to solve it immediately? What happens? You are stuck. You either wait it out or you sell. So based on that, if you are looking to build reliable financial services that people will want to use, we will need a more stable currency to operate within the system, and that is where stable coins come in. Stable coins are cryptocurrencies that are pegged to the value of a real world asset. Usually some major currencies like the US dollar. That's why most stable coins are pegged to the USD. Now, as we speak now, the most stable coins for now are the TUSD, Theta USD, the USDC, that means USD coin, and then the BUSD, that's Binance USD. All right, these are the three major ones I use. Now, we used to have that of Terra Luna, the UST, all right? And that one tanked when Terra Luna crashed. And that's the challenge we have, because there are two kinds of stable coins. They are the ones that are backed by real dollar, fiat dollar in a bank account, fiscal bank, backing each dollar minted of that stable coin. And there are those that are balanced on the crypto chain by virtue of an alternate currency. For example, for Terra Luna was used to counterbalance the UST. So whenever UST depegs, they burn some Terra Luna to get it up again. Whenever UST goes above, they mint on Terra Luna. That's how they were striking the balance between the two of them. So immediately Terra Luna had challenges, started tanking. Of course, the UST depegged, and that was how that whole program went kaput. So that's the risk of stable coins that are not backed with physical dollar or notes. So at least we are sure of USDT has been able to show us evidence of backing by currency, not just by paper, bank papers like shares and rest of them. No, proper currency. So when you want to enter DeFi space, please restrict your stable coin usage to these three. For the meantime, there are numerous stable coins, of course, but these are the three I advise. All right. Now, it's important to understand exactly how a product or service works before investing in it, so you can be aware of any issues that may come up. Different DeFi protocols have different rules of engagement. So you have to understand them before you go into them. If you don't understand this, you might end up, it's like saying somebody came someday and was discussing with me, a student of mine, and told me that he invested a particular amount in a staking platform inside Binance Centralized Exchange. And then he saw a 40% return on investment, right? That's in 40% annual performance yield, APY. That's how they put it, right? And he assumed, and the staking was for 3 months. So he assumed that the staking means he will earn 40% of his capital in 3 months. Meanwhile, he did by 7 days, by 14 days, sorry, the thing has stopped yielding. So he was confused and then got in touch with me because my student, I told him no, that it stopped at 14 days because that particular pool was a staking pool designed to last for 3 months. And you didn't enter when it started, you entered when it was 14 days to the end of that staking pool. Then also some staking pools, even though it will last for 3 months, they have a maximum number of coins that can be staked in that pool. And once people stake up to that coin, it stops receiving newcomers, right? Then meanwhile, that 40% APY you are seeing is 40% annual performance yield. So it's 40% of what you earn in 1 year, then break it down to months, break it down to weeks, break it down to days, and then you get what is you're entitled to. Okay, so that is how it functions. Now, it's important to understand these things so that when you calculate, you can calculate rightly your profits or your losses, as the case may be, depending on what you are going into. And when you are entering DeFi protocols, also take note of the inflation rates. It's very important. Some countries have double-digit inflation. For example, Nigeria, we have a double-digit inflation at 19.8%. So if you are going into a staking that its yield is below 20%, of course, else if you are staking in USD, which in USDT, yes. So you can now look at the American currency's own inflation rate and then calculate how much is the protocol going to yield you, what is the inflation rate, do your plus and minus check in 1 year, what happens? Because you might end up going to stake in a protocol for 1 year only to end up with less than you should have, because you are battling with inflation and battling with currency devaluation. But if you're in Nigeria and you are staking with USDT, of course you are in an advantage position, because the Naira is always falling as against the USD. So whenever your stake comes out, of course, definitely your USD is stronger than the Naira. So it's a good arrangement. That's why we encourage Nigerians to step up and begin to think about investing in moving your monies into USDT or USD, and then doing business you want to do on the on USD instead of with Naira. Okay. Now, the next thing we'll be looking at is, to sum it up, it seems that DeFi revolution has reached its early adopter stage, And the coming years will tell if it manages to cross the chasm into mainstream adoption. Now, DeFi is on course, of course, to get mainstream adoption because we are seeing governments now moving for digital versions of their currency. Like now, the US will soon be launching their own digital dollar. And those digital dollars are just one step away. They will function on the blockchain for sure. And of course, they are programmable now. So government can actually give you a loan and then program where you can spend that money. Let's say, for example, you go to the government and say you want to take a loan to buy a car, for example. Now, instead of, okay, let's put it the other way around. You want to take a loan, you want to take a loan to build a house. So you assess a housing funding or mortgage loan, right? Now, instead of building a house, you want to use money to go and buy a car. Now, the point you're supposed to pay back for the loan, for example, most like maybe the car had an accident and you don't have the car again. So you neither have the car, you didn't build the house, you can't pay back the loan. Now, government is in a dilemma. Even if they come and take that car, which you bought with their money, is destroyed, is damaged, nothing can happen. Now, they carry you around, they can't kill you. Worst case scenario, they send you to jail for misappropriation of funds, right? And that's all. But with programmable money, digital currency, the government can program, ask you, where do you want to build that house? How much is the land? You tell them, okay, I'm building the house in Abuja, in Wuse2, in so plot of land. Government programs that money to be only spent inside Wuse2, inside that street, to the owner of the land. So if you want to send that money to go and pay for a car, it will not leave your wallet. You want to use the money to go and buy food, it will not leave your wallet. But later you send the money to pay for the land, it will move into that wallet because it has been programmed to enter into the wallet of the owner of the land. The same way, the requirements to build the house, maybe building materials, right? You tell them, okay, there's a neighbor of yours that sells building material and he's the one you want to buy your materials from. You send your bill of quantities to the government. They program that money now to only enter into the account of the building material person. So what happens? You can only spend that money in what it is allocated for. Same way, you want to take loan for agri, you can only spend it in agri-related environment. And that thing again, this thing will do is that you can geofence spending. You can say, okay, let's say you have staff who work with you, and normally at the end of the month, they give you a bill of the fuel cost of them running around marketing for you. Maybe you give them a car to do their running arounds. Now, the staff might tell you he's in Abuja, whereas he's in Lokoja or he's in Otropa. Okay? Now, companies now put tracker in cars so they can monitor where their staff are with the car, right? Instead of wasting your time, simply program it such that the fueling of the car from the money allocated can only be done in specific filling stations. So when your staff leaves Abuja to go to Lokoja or anywhere, he will fuel with his own money. But once he comes into Abuja environment and wants to fuel, that money for fuel can leave the wallet. Do you understand what digital programming is going to do? So a lot of things are going to change from now on. So just start getting used to all this. So there's no doubt that the decentralized financial system can benefit a huge portion of the population that currently suffers from financial discrimination, right? High fees and inefficiencies in managing their funds. Now, the beauty is that in decentralized finance, the fees for this transaction come down to millicents, 0.03 cents, 0.02 cents. It's as small as that. In fact, that's the beauty of it. In some blockchains like the Hyperledger is free. So transaction fees are drastically reduced, and then these transactions are instant. It doesn't go through clearing, doesn't go through settlement. It's instant. And then there's no double spend. So it's so beautiful. And then you have the choice to choose where you want to interact. For example, if you're banking with a particular bank in Nigeria, for example, like you want to move funds to another bank for another project, right? There's how you want to move your funds. The bank will tell you, we don't have that kind of money. You should wait. Maybe you have to give them time to gather the money together. But on decentralized finance, there's not, you either have it or you don't have it. Once you have it, you can move it to anywhere in the world. In regular banking now, sometimes you want to move money abroad. It takes like 3 days, some 7 working days for it to clear. This one is instant. Within 2 minutes, everything is done. That's the beauty of it. So all you have to battle with is running fundamental analysis on the project to be sure the project is sustainable and the team behind the project are sincere about the project. That's all. Aside that, your monies are as safe as the project itself, because most DeFi platforms, you interact directly on them using your own decentralized wallet, not a centralized wallet. Because when you interact with DeFi inside a centralized wallet, your money is still in the hand of the owner of that centralized exchange. Let us say you go to stake in a staking pool or product inside Binance. Yes, you're interacting with Binance, but your wallet is inside a centralized exchange, Binance. So any day Binance closes or anything happens, you can't get your money out because it goes with them. But if you have your own MetaMask wallet, Trust wallet, Ledger wallet, Trevor wallet, any decentralized wallet, and you interact with a smart contract directly, of course, there's no closing, because if anything goes wrong, most of these smart contracts are designed to return the funds upon maturity back to the wallet that interacted with ab initio. That's the beauty of it. So all you need to bother about is the security of that platform you interacted with. Because some of these DeFi protocols, if they're not audited by a third-party auditing firm, there might be a backdoor or a loophole where hackers can come in and drain people's funds on the stake protocol, right? But that's why you need to look out for those projects. Before you invest in any project, please make sure that project is third-party audited and their security meets up with the ISWO standards. All right. So these are things to look out for. But aside that, everything in DeFi is wonderful, and DeFi is still evolving. There are more products coming out day after day. And the beauty of DeFi is that products can be tailored or domesticated to the needs of the particular area it is servicing. So with DeFi, for example, you can create a DeFi protocol, a DeFi program that services just one street, or maybe services just a church. Let us say a church comes together. Let me not call any church name, but these big churches that have big congregation. Okay. With DeFi, they can create a program that just takes care of their members, maybe their members' financial purchases, needs, transfer, businesses. So organizations can handle their things by themselves without needing a bank or any other body or government to do it for them. So once 2 or 3 people come together, agree on something, they program it onto a DeFi space, and it starts working for them. And the beauty is that DeFi is just beginning. DeFi 2.0 brings an even better solution, because with DeFi 2.0, you have even options for bonds, to participate in bonds, treasury bills, and the rest of them. That's the area where DeFi is trying to create room for you to interact with government financial instruments. That's the beauty of it. Okay, so I'll stop here for now. In subsequent classes, I can now go in deeper. I have a course on DeFi that has about 38 video modules on DeFi. DeFi is so big, it's so large, and that's why it's an advanced class for my advanced students. Okay, so this is an introduction to DeFi. I'll stop at this point and then open up the lines for those who have questions to ask me questions and call it a day. All right, any questions? Unmute yourself and then you ask the question you want to ask, or you can go to the chat room and type. If your mics won't come on, just go to the chat room and type, and I can pick the question from there. So when you say there's no audio, hello, were you able to hear me? Solomon, you said there's no audio. I'm only accessing video. I think it was from your end. Most likely you didn't enable your microphone. Okay, it's not even in the group. All right. So in the absence of any questions, let's call it a day. Let's go back to the group and let's keep chatting. Dr. Peter, I got your message to me. I'll call you within the next 20, 30 minutes so we can discuss. Okay? I got a proposal. We'll talk about it in the next 30 minutes. All right. So Chika Dibadike, see ya. Martins, see you later on. Okay? All right. Let's talk about the WhatsApp group. Bye, everyone, and have a wonderful night rest.